Welcome back. Well, the markets continue to trade in the green, and the good news is the mid-cap index is doing a relative outperformance. It's up close to around 0.6%, with close to 3 stocks advancing for every 1 stock that's declining. But let's get chatting with a couple of managements. KEC International posted to be a mixed set of numbers, actually, in the Q3. The order book has increased big time, though, and things are looking up. The budget as well had various aspects which could bode well for them. But to understand more about that, we're joined by Mr. Kejriwal, who joins us on the show. Hi, sir. Thanks so much for joining in. Well, given that you're sitting on a big order book, as well as, the budget had various tailwinds for your company. Give us a sense. By the end of this year, what do you end with? Around 16,000 crores, 16,500 crores of revenues. Could you tell us a rough revenue number? And what do you grow on that?
So, morning. I think if you look at our numbers, we have grown by 31% this quarter. Overall, around 29% for the 9 months. Guidance had been 20% plus at 20%. So I think it now becomes 20% plus. So if you look at our last year's numbers, we should be close to probably 16 and a half or so.
On that base, sir, what kind of growth can you project for the next couple of years? Also give us an insight onto margins. That was very disappointing. And the Brazilian part of the business continues to report losses. Does it turn around in Q4? And from then on, you start heading towards double-digit margins? So on revenues as well as on margins.
So let me talk about Brazil. Brazil, we had some legacy projects which have all been completed as promised in Q3. So our expectation is that from Q4 onwards, we will start reporting an operating profit in Brazil. We still have an issue because of the interest rates which are at 17-18% in Brazil. So we may still have a PBT loss, but operating profits will start from Q4 onwards as far as Brazil is concerned. As far as next year is concerned, we have an order book plus L1 of around 35,000 crores. And with all the announcements which we saw on capital outlays yesterday, we do expect that, we should get more orders. So next year, we are confident that we should do another 15% or so growth on top of the 20% plus for this year.
What did you see on order book, Mr. Kejriwal? You are now at 35,000 crore. What's the order book now?
We are at, Lata, we are at 29,000 crores orders plus 6,000 of L1. So we are at 35,000 crores sort of an order book today.
Okay. And what margins could you garner in these? Do they come with some set commodity prices, or do you think you can improve your margins?
So typically the margins would vary from 8% to 10-11% or so. So that's the way the margins on these orders would be. A large part of these orders are on variable pricing, but there are some which have fixed price. So with what has happened in the last 2 years and also, so most of the metal risk what we have already been hedged. So I'll say that we are more or less okay with our margins.
You said that your 9-month growth is what, 29% against a promise of 20%. Now, this budget seems to be up your alley in every way, with the kind of thrust on capex and railways. Why are you so modest in your revenue forecast at 15%? Why not repeat what you've done this year?
So, Lata, what will happen is that these outlays have been announced, so they need to get converted into specific projects and tendering and all that. So I think by the time this numbers get translated into orders for us, will probably be Q3 in terms of the financial year. So this will help us in maintaining our run rate for FY25. Okay. FY24, some of them may come this year, but I don't see. But I already have an order book of 35,000. So 15% should be easily achievable.
Okay, all right. Final question, Mr. Kejriwal, before we let you go, I'm going to break it up into 3 parts. One is your working capital days have come down to around 140. Is there scope for improvement out there? Your interest cost as a percentage of your sales is around 3.5%. Is there scope to improve out there as well? I need to nudge you on your margins. Last time as well, I asked you, you said maybe 10% is possible. Q1 FY24, 10% is possible?
I don't think Q1 is possible. What we had said is that Q3 we will start turning around in the margins. So our margins are slightly better than Q2. Q4 will definitely. So I think quarter on quarter we'll probably get a 75 to 100 basis points bump up in the margin. So I think Q3 next year should be a normal working year for us in terms of margin. As far as working capital is concerned, in the last 6 months, we have brought down our net borrowings by 450 crores. We have promised 500 crores by March end, and I think we are pretty confident that we'll reach there. Interest cost has been a problem for us because of although the borrowings are going down, but the interest rates have gone up. So we were at 4.5% in India. We are now paying 7.5%, 8%. So I think interest cost will be a cause of worry, but we do expect our working capital to go down. So what we are expecting is that even with a 15% growth next year, our interest cost in absolute terms should not go up. The percentage today, which was at 3.4% to revenue for this quarter, should probably come down to around 2.5 or 2.6% next year. So there will effectively be a 80 basis points reduction in interest to revenue.
All right. Thank you very much, Mr. Kejriwal. I appreciate you joining in